My investment process is really probably two parts. One is just get out and see the market. So Fidelity is a bottom-up stock selection firm. So we meet the market. We meet the whole Australian market every quarter. We rate the stock 1 to 5. 1's a strong buy, 5's a strong sell. From that process, it's really an industrialized process where we meet the whole market, whether we love the company, hate the company, or anywhere in between, whether we own it or we don't own it. We typically will have maybe 100 buy-rated stocks that come out of that investment process. As the portfolio manager, I'm then trying to pick the best 30 to 50 stocks to go into the portfolio to deliver that outperformance for our clients. I manage risk in the portfolio a couple of different ways. One is through that 30 to 50. Below 30 is not really a diversified portfolio. Above 50, you start to get too close to the market. So to me, 30 to 50 is really a sweet spot. It's got enough oomph to deliver outperformance, but it's doing it in a very risk-controlled way. We do plus or minus 5% at a stock level, plus or minus 7% at a sector level. We'll maintain up to 5% cash. So it's really trying to deliver that outperformance in a risk-controlled way. When I look at the investment process, I think Suncorp's a great example of that. So Suncorp always traded at a discount to its peers. So it was this sort of company that fell between the cracks, forgotten about, discount because it's complex. On top of that, it was always a bit of a forgotten about stock, and that's one of the things I look for as well. I want to differentiate from the market. What's our thinking relative to what the market's thinking is? And I think there was a big difference at Suncorp. They then went through the process of selling the life insurance business, selling the wealth management business, selling the repairs business, and finally selling the bank. They are now just a general insurance business. They're also going through the process of seeing a valuation uplift because now people go, well, actually, they're comparable with the other general insurance companies, so they should get that same multiple. Good earnings, improving valuation, really attractive capital base, and that was different from the market, and that's led to good returns from Suncorp.